For tax purposes, if a taxpayer sells an income-producing asset, is that transaction a sale of the asset's future income or a sale of the asset itself? The Ninth Circuit addressed this question in Metropolitan Building Company versus Commissioner. The Metropolitan Building Company leased property from the University of Washington. Metropolitan subleased part of the property to the Olympic Incorporated, which built a successful hotel there. As Metropolitan's lease neared its expiration, the university began receiving offers from hotel companies to lease the hotel property. So Olympic came up with a plan to maintain control of the hotel property. First, Olympic negotiated with Metropolitan to buy out the last 2 years of Metropolitan's primary lease on the hotel property. Metropolitan agreed to sell the remainder of its lease to Olympic for $137,000. This number included the $97,000 of rent and property tax money that Metropolitan would have collected from Olympic during the last 2 years of the lease and sublease, plus an extra $40,000 to cover the sale's expected tax impact on Metropolitan. Once it owned the current primary lease, Olympic negotiated with the university to sign a new primary lease for the hotel property right away. Under this new lease, the university received $700,000 more in rent for the next 2 years than it would have received under the original lease. In exchange, Olympic received a long-term lease that gave it control of the hotel property for another 22 years. On its tax return, Metropolitan claimed that it had received the $137,000 for selling an asset, namely, its lease rights in the hotel property, and therefore the money was a capital gain. The Commissioner of the Internal Revenue Service determined that the money was the early receipt of future rental income, and therefore was taxable as ordinary income. Treating the money as ordinary income meant Metropolitan owed additional taxes. Metropolitan petitioned the United States Tax Court for determination that the payment was a capital gain. The tax court ruled that the payment was ordinary income. Metropolitan appealed to the Ninth Circuit.